Hello guys, in this video I want to explain the difference between term life insurance, whole life insurance, and universal life insurance. Term life insurance coverage duration temporary. Basically, you kind of rent it. You can rent it for you can have a life insurance policy, a term life insurance policy, um, a duration of 10, 20, or 30 years. And the purpose of the term life insurance to provide it provides death benefit if the insured dies during the term. Cost, generally, the least expensive type of life insurance is term. One thing I want to do a side note before I go on with this term life insurance, guys, make sure if you do get life insurance, term or whole life, make sure you have living benefits included into the policy. All the policies that I offer come with free living benefits included into the policy, which means if anything happens to you as far as illness or accident, you'll be able to advance your death benefit and get either monthly payments or get a lump sum while you're alive to use it however you like. You can take it to go on vacation. You can take it to pay off mortgage, put money in the bank, take care of children's college. You can do whatever you want to do with that money. So living benefits is something very important. Actually, a life insurance policy, in my opinion, is useless unless it has living benefits, which means you can use it while you're alive. Make sure that feature is available when you purchase a life insurance policy, especially if it's term. My favorite insurance policy to offer is term life insurance with living benefits. All the policies that I offer come with living benefits automatically. I don't even ask my client. It just comes with it. All right, let's go on here. Cash value, as far as the term life insurance policies, do not accumulate cash value. It's pure insurance with no saving component. Best for you. Who's it best for? People who want affordable coverage for a specific period. For example, until kids are grown or mortgage is paid off. Okay, I hope this give you a good understanding of what term life insurance is. If you guys have any questions, please leave them in the comment below. Let's move on to option number 2, whole life insurance. Coverage duration, lifetime, which means you have this for as long as your premium are paid. Purpose of this policy, the whole life insurance policy, death benefit plus cash value accumulation. There's actually a saving component in a whole life insurance policy, which means every time you make a payment, every time you make a premium or monthly payment into the policy, a portion of that payment goes into a saving account that it also grows, has it grows at 4 to 5 to 6% depending on the policy. Cost, more expensive than term life. Cash value, builds guaranteed cash value over time, which can be borrowed against. You can borrow money against your whole life insurance policy and you don't have to pay it back. What happened is, if you have $1 million policy and if you borrow 100,000, that 100,000 will be taken out of your death benefit or face value, which means instead of when you die, instead of your family getting $1 million, they'll get 900,000. So if you have $1 million and you borrow 100,000, your death benefit will shrink by 100,000. I hope that makes sense. Again, if you guys have any questions, please leave them in the comment below. Premium, fixed and level. What does that mean? Premium, it means if you start out your policy with $100, say if you get your policy in your 20s, which is the best time to start. Actually, I think life insurance should be started a lot younger than that because you can lock in your low rate when you're healthy and young. Fixed and level, which means if you start out your policy with $100 from day one, if you turn 60, 70, 80, your policy, you're still paying the exact same amount years down the road. Fixed and level premiums. But who's it best for? Those wanting lifelong coverage and a built-in saving component. Let's talk about universal life insurance. Coverage duration, lifetime. Flexible, which means your payment, you can make your payment anytime you want. You can stop making payments, you can pay extra, and so on and so forth. Purpose, combines death benefits with flexible savings, investment component. So this one has, the universal life insurance has a investment component built in it. Okay, so you're basically, when the S&P 500 is outperform and it does really, really well, you participate in the gain. So if your gains are 6, 7, 8, 9, 10, 12% when the market goes up, when the S&P is doing really well, when you're in a bear market, you participate in the, I'm sorry, I shouldn't have used the word bear, bull market. If the market's performing really well, if it's a bull market, you perform in a growth. But also what's really great about universal life insurance, you have a zero floor, which means when the market goes below zero, it doesn't hurt your policy. You don't participate in any of the loss. You have a floor of zero, which means when the market crashes or it's not doing really well, that doesn't affect your policy. Cost varies, can be more flexible than whole life, but also more complex. Cash value builds based on interest rate or market performance depending on type, which means, your gain's going to depend on how the S&P 500 performs. Premiums flexible, can adjust over time within policy limits, which means you're not stuck at a certain payment. You can pay more or you can pay less or you can stop payment for a while. Who is it best for? Those who want life coverage with flexibility in premiums and the potential of higher cash value growth. I hope that makes sense, guys. So the people that universal life insurance is always, it's good for those who don't want to get locked in at a certain payment. Say if they start out their policy with $500 a month because they want to grow their cash value, and say about, a year or two into the policy, they decide to stop paying for, 6, 7, 8 months. They can do that depending on the policy that they choose. And also it has a higher potential cash value, which means if the if the S&P 500 is doing really well and you're participating at 9%, for example, your cash value can increase by 9%. And if the S&P performance 600 if it's doing really well, if it goes up to 6%, you participate in the 6%, or 7 or 8 or 9 or 12 based on how your policy is structured. But if the S&P 500 goes below zero, you don't participate in the loss. You have a floor of zero, so your money is always safe. Your cash value. All right, let's do summary table. Features: life, term life, whole life, and universal life. Coverage duration fixed. For your term life, it's fixed. For your whole life, it's lifetime, and for universal life, it's lifetime. So whole life and universal, those are whole lifetime coverage, and a term life policy is fixed term. So if you get it for 10 years, 20 years, or 30 years, it would expire after that time. Basically, you're renting the insurance, and it will expire at one time. Cash value. The term life insurance has no cash value. Whole life insurance, yes, it does have cash value, and it's guaranteed. Universal life insurance, yes, it does have cash value, and it's flexible, growth-based. It all depends on how the S&P 500 perform, basically. Premiums. On your term life, it's fixed, and it's very low. It's great for young people. Whole life, it's fixed, but it's high. Universal life insurance, it's flexible. You can pay, you can make no payments, you can make extra payments, so you got flexibility in the universal life insurance. Complexity. Term life is simple, it's just straightforward. Whole life is moderate, and universal whole life is complex because your payment's going to fluctuate. Cost. Term life has the lowest cost. Whole life is high. Universal whole life it varies. I hope that makes sense, guys. I hope you guys enjoyed today's video. I want to keep it real simple just to explain the difference between term life, whole life, and universal insurance. Universal insurance, also called universal whole life insurance, because it's something you have. You have it for the rest of your life. If you guys enjoyed today's video, please don't forget to like, subscribe, and comment. And most importantly, make sure you share this with anybody that you know that needs this information. And if you guys are interested, please give me a call. My number's on the screen, or text One Life to the number on the screen. Have a wonderful day and best of luck. Before I go, I want to say one thing, guys. The best time to buy insurance is today. Don't wait till the house burned down to go buy insurance on the house. Okay, don't wait till you get into a car accident to get insurance. Get it while you're young and healthy. This way you can lock in your rate in the event something does happen as far as sickness or accidents. You have access to that money while you're alive. And one key point that I mentioned when I first started this video, please, 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 please remember, if you get a life insurance policy, especially term, make sure it does come with living benefits so you can use it while you're alive. Have a wonderful day, guys. Best of luck.
If you're a man with a family, life insurance isn't a choice, it's a responsibility. The best part? You decide your monthly payment. DM me or comment One Life if you're ready to protect your loved ones.